Hello traders. The title of the video is Currency Trading Education Part 7. If you have not watched Currency Trading Education Part 1 to 6, you may do so before watching this video. Before we continue, I would like to say to traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. It is primarily for the TSTW traders. Alright, let's get started. In this video, we're going to discuss the importance of central banks, the decision and the policy made by the central banks, how this can affect the Forex market, the currency market, and how we can make excellent decisions in relation to these market players, because the Federal Reserve, the central bank, talking about the Bank of England, the Bank of Japan, the Bank of Australia, these central banks, they are also market players. We have seen in Switzerland recently when they have the Bank of Switzerland has capped the exchange rate between the euro and the Swiss franc. That has created a bit of distortion in the market, and some traders lost, some traders make money. But this is what we are talking about, that these market players, big market players that can make a decision, and this decision can change the dynamics of the market. This is the euro Swiss franc that has been capped by the central bank in Switzerland. I'll go back again to the USD yen currency pair, talking about the dollar yen currency pair. In 2008, the economy in the United States was in a downtrend, and the central bank, the Federal Reserve, has made a decision. The decision was to start printing the dollar. By printing the dollar, the value of the dollar was going down. That's what we call quantitative easing. There was a three scenario of quantitative easing, in which he was printing money, buying asset, buying bonds, and we have seen that the dollar was going down in relation to other currency pair. All right. As the dollar was, the Federal Reserve in the United States was selling the dollar, or was devaluing the dollar, all right, most currency pair was going up, all right. What was taking place is that a lot of rich people, suppose you are in America, you are a very, very rich person, or you invested in the United States, you know that the value of the asset in the United States is going to go down. If your asset is in dollar, you will move them out of dollar because you know that the value of that currency is going to go down. You will move your asset out of the dollar into another currency. That's what we call currency flight, and people taking their money out of the dollar and converting them into another currency. So if you are a rich person, you will convert your assets into another currency. So a lot of money went out of the United States into Japan, into Brazil, into Australia, and because the dollar was going down, no one wanted to keep the dollar. People were even saying that the dollar will crash, will go to zero. But look again, though the same people that were saying to us in 2011, 2010 that the dollar will go to zero, there were a lot of video on YouTube saying to people that the dollar will go to zero. Look, the dollar is back again up here. Why? We are talking about the central bank, their decision. Recently, the central bank in Japan has started printing also money, which means they started devaluing the yen, selling the yen. So the yen in relation to other currency pair was going down. So euro yen, any currency, pound yen, was going up. But the yen itself is going down in relation to other currency pair. So we have seen now the Fed, also the central bank in the United States, has stopped printing the dollar for now, all right, and also has told the market that they are not thinking to print more dollar as such. There are other measures they can take, but not to print directly the dollar. So the dollar has bottomed here, right here was bottoming here around the zone of 7.633, all right, and then from there is because of the change of policy. They don't want to print the dollar anymore. They don't want to devalue the dollar as such. They will take other measures to boost the economy, but not to devalue the dollar directly. The market responded by buying the dollar. So investors millionaire, billionaire, those who are wealth managers that were managing the wealth of their clients, start pulling their money out of currency like Brazilian real, the Cyprus money, not Cyprus, Turkish, they're pulling money out of Japan because they know now. Suppose you're in Japan, you know now that your government is going to devalue your currency, you will move your asset into another currency. So because the Fed has stopped printing the dollar, people were returning the currency that left United States, were returning back to United States. That's what we see now, the dollar yen going up. All right. Though I was telling trader that we are expecting the pullback. You see on this quarterly chart, it's clear that we didn't have the third wave so far, though a lot of people were talking about that we are in the third wave for the dollar yen. That's not true. If you look on the quarterly chart here, you see trend line is broken. We are still waiting for it to pull back a bit. My view is that in normal condition, without the Japanese government intervening or the Fed making any decision that will change the dynamics of the market, without the hedge fund being too greedy, we will expect the dollar yen to pull back even to the zone of 8400. That's a greedy target. That will remain to be seen. So far, it's going up vertical like this, but the market does not go vertical. But we watch this level here, okay, 105. It will be, okay, a kind of minus 180 turn, all right? 105, watch that level. If they push it too far, watch the level of 105, okay? But we are expecting it, we know it should go up, but we want it to pull back before going up, okay? All right, so the Federal Reserve decisions, their policy can determine the direction of a currency. So the Federal Reserve in the United States has stopped devaluing the yen. The central bank in Japan started devaluing the yen. Look, the USD yen start going up. If they change their policy again, that may have another effect on this currency. All right, we see it all the time. Another currency that we will talk about is the Euro USD. In 2010, we were telling traders that, in fact, it was madness. There was a huge direct manipulation. The ECB president that time was Mr. Trichet, that was propelling the euro to the upside. I thought in my mind that was crazy. But the market was saying that because the United States was in a recession, because of the credit crunch, that there was no real asset, okay? There was no property bubble in the Eurozone, so everything is perfectly okay. And many money managers were pulling money out of the United States into the Eurozone, saying that there will never be a recession in the Eurozone. Look at the fundamental in Germany, that everything is sound, that there won't be any recession. But the Eurozone is not only about Germany. You see recently the crisis in Greece, in Cyprus. So everybody was looking at Germany and saying, yes, everything is perfect in Germany. Yes, this is true. But the Eurozone is not all about Germany. It's not all about one country. So as the trouble has started in Italy, in Portugal, in Spain, in Greece, people start pulling their money again out of the euro. So in 2010, you see here, this is, I will show you now, we were here, somewhere in this zone, and we were telling people that in fact, the year 2010 is start from here down to this somewhere here. So we were up somewhere here, God knows, if we were somewhere here, okay? So people were buying the euro. So we say to them, no, you shouldn't buy. So price was going up, 2010, 2011. Say, no, you shouldn't buy the euro because... But the ECB did not change their policy because normally what they should have done is to start devaluing also the euro straight away, but they didn't. They were raising the euro up, they were pushing the euro up, saying that everything is okay. So the euro was going up, going up, going up. But recently this year, the smart money understood that this thing is not going to be going up forever. And also looking at the market pattern, people saw it back down to the level of 120.00. This is the level we were calling since 2010. The price has to go up first before returning back to this level of 120.00. But now the market want to buy again the current central bank, the current president of the ECB, talking about Germany that is mostly influencing the decision of the ECB, because the Japanese goods are becoming very, very cheap right now, okay, the central bank, the ECB, decided to, the Germany is putting pressure on ECB to devalue also the euro because of the crisis in the eurozone. Now the Japanese goods are becoming very cheap, very competitive. They see that the euro shouldn't go up, but the market in fact want to buy the euro and bring it up. The point I want to make here is that though we are looking at the price, making decision, technical decision, fundamental decision, one should not forget the central bank, how their policy can change the dynamics of the market. You see that the market was buying the euro. Even today we see it, there was some news that people should sell a euro. But in fact, looking at the chart, people should buy the euro. But it doesn't mean that the euro cannot go up, but they will sell it first, like they did in 2010. They will sell it first, because that's the intention of the central bank. They will sell it first. Though they shouldn't sell it, they will sell it first. And later on, you see, before they bring it up. It's happening all the time. Right now, talking about Australia and New Zealand, their central bank want to devalue their currency, all right? The New Zealand dollar, the Australian dollar. The central bank policy right now is to devalue their currency slowly. But they are not going to, they didn't say openly yet that they're going to print money big time and devalue. They were a bit careful, but slowly they are, okay, cutting interest rates. But before they were raising their interest rate. By raising the interest rate, they are putting the value of their currency high. And people, a lot of money was coming to their country, investment, because the interest rate in United States was almost zero. United Kingdom, London here was almost zero. So those who were savers, smart money, people who got a lot of money in their bank account, they don't want the money to stay in the bank without any interest on it. So they send the money to Brazil, they send the money to Turkey, they send the money to New Zealand, they send the money to Australia. So these decisions are made to increase their wealth. The wealth managers are controlling the wealth of these people. So there is a transfer of wealth from one country to another as the interest rate was going down and as the central bank were busy printing the money. So the same thing is happening in Japan now. As the Japanese government is printing money, devaluing the yen, there will be outflow of wealth out of Japan into other currency. In fact, it's a conversion. They will convert their wealth into another currency. And when they see that the yen is about to go up, they will reconvert it again into the yen. The key point to remember is that the central bank decision, apart from the economy, the central bank policy can change the dynamics of the Forex market. This is about currency trading education, video 7. Thank you for watching, and we will speak to you very soon. We are the TSTW 24 traders. Speak to you soon.